Hey guys, what is going on? Welcome back to another video on the channel, and today we're going to be taking a look at a couple more things. Obviously, these videos are really hard to do. We did a couple stock streams a couple months ago, but it's just really hard to do with the FIFA balance right now. But yeah, some of you guys really enjoy these videos, man. There are people that are watching these videos, and I've had a couple people come into the stream and say, Nick, can we get an update? What do you think? And I've also had a couple people that have told me, Nick, like, thanks for some of the picks. They've been doing really good. So we're going to go over a couple of the picks that we made in the last couple of weeks. We're going to kind of talk about the market as a whole right now. And yeah, if you guys enjoy that, let me know. And if you have any feedback in the comments down below, also let me know. Again, none of this advice is my fault if it doesn't work out for you. And I'm not giving you direct advice. I'm more just kind of going through with you guys some things that I'm doing in companies that I'm interested in and companies that I have done well with recently. So yeah, so last video, we really covered a couple of companies. I think the first company that we covered was Amazon, and I was talking about how Amazon is kind of ranging in this 3.0, this 3.0 to like 3.2 range a lot of the time. We also talked about Google, and we were talking about Google going higher, and it actually went up to the 1800s, and today it's back down again. We talked about Wendy's being a very stable company. We talked about Twitter being a massive buy at 45. I thought it could go a lot higher. Got panic sold after its last earnings, even though it had very good earnings, and it's starting to roll out ads. So that was a big one that we talked about. We talked about the Dow Jones. I talked about how I liked Zillow a lot at 106. So that we'll take a look at today too. And I talked about how Zoom is an interesting one at the moment, and then Sony as well. So we went through and we talked about those. And then I think the one 2 weeks ago, or 3 weeks ago, we probably talked about, I'm pretty sure we probably talked about Alibaba a lot. We probably talked about Morgan Stanley. Netflix was a big one. Netflix was one that I had a big one on. And yeah, we talked about a couple of these types of companies. We talked about how Amazon was up from that last point. So yeah, we're going to go ahead today. We're going to talk about a bunch of these companies, kind of how they're doing and things like that. I want to get my phone because I have a lot of my stocks and stuff that I manage on my phone, on my app, on my stocks app. So yeah, it's a pretty good day in the market today. The market has been doing very, very well recently. The Dow is now over 30, which is every time we're over 30,000, that's kind of a baseline for you to understand that the Dow is extremely high, right? That means that we're very, very high right now in the market. As you can see, this is the pre-corona price, 29,450. And now the good news about the vaccine, which kind of happened around here, and the election of Biden winning. In my opinion, all politics aside, my prediction was that the market would react very strongly to a Biden win. I think that would. I think the reasoning for that is that I think it adds less. I think it would add more country stability for the United States, but also I think that a lot of people are thinking that with a Biden win, that we are more apt in the market to have, at least with politics and the government in America, we are more likely to have a divided government so that it would be more stable for the market. A divided government would allow, and what I mean by that is you have a split or you'd have a lot of Republicans and a lot of Democrats. And what that would do is it's going to be hard for a lot of legislation to get passed or things to get done in the next couple of years, which would enable the market to be more stable generally, if that makes sense. So I think the market reacted really well to these two things recently. COVID vaccine, which does look really promising. They're rolling it out all over across the U.S. right now. It looks really promising. Again, do we know all the side effects of that? No. But it looks really promising, guys, that is having the market react really strong. So those are the two main things right now that are going on currently in the market. I want to take a look at some things. This will be a little bit longer of a video today because we do have a lot to talk about. I want to talk about Apple, man, because Apple is a company that had the stock split, got up high, and then had the stock split. We have earnings coming up on February 2nd. Now, I think what's really interesting for me is that because we have all these good things going on, we have, obviously the election panic is kind of over. We've got a vaccine on the way, and bar any side effects on the vaccine, it should have a stable market. Now, if we get some side effects on this vaccine, in my opinion, the market is going to plunge. And these would have to be very significant side effects. And obviously, I'm not hoping for that because I would hope for the health of humanity over any money-making ability. But if that does happen, we will make a video talking about some of the stocks that are down and all that good stuff. But anyways, Apple has earnings on February 2nd, and a lot of companies have earnings end of January and the first couple weeks of February. In my opinion, with the two pieces that we have right now going on, I think there's a chance that this market keeps riding up, because I think that what people will do is I think that people will continue to invest right now because the market feels stable, the country feels a little bit in a better place, but also we're far away from earnings. And usually when we have these gaps of earnings, I always feel like the market kind of climbs up a little bit unless a company has a horrendous previous earnings. So when we look at Apple, right, I managed to have a huge strike price last week at Apple, 113, like 112, 113, and now we're up to 128. The previous high was 134. This was after the stock split. I actually bought in. My initial in Apple is really low. It's like in the 70s, even in the 50s. But kind of sometimes when you're in something so early and you really like the prices, you can still trade around and in this range. So I've been hitting anything really with Apple under 115. Is it time to take profits yet? If you want to take a little, that's fine, but I don't think so. I don't think so. I don't think it's time yet. So Apple is interesting me because I do actually think this can go higher. I would take a look at Apple on maybe one of the next dips. I think that they're still a company that's really, for me, somebody that's going to do well. Now, I don't trade with Tesla much, guys, at all. It's too volatile for me. I'm not a huge... It's not that I'm not a huge believer in the company. It's just that I'm not a huge believer in buying stocks at their all-time highs, and that's what this keeps doing. So Tesla is crazy, man. Tesla is kind of like Bitcoin. Bitcoin is actually 22K today. So it's the Bitcoin of the stock market. A lot of people in and out of this stock. A lot of people doing day trading on this stock. So that's just something I wanted to point out because Tesla is super, super high. A pick that I had that's been doing really good was Sony. Sony was a huge pick of mine a couple months ago, actually last year before, I kind of told a couple of people before the place, we knew that the PS5 was coming out, and this would lead to some really, again, the PlayStation is not Sony's full stock, but the demand for the PlayStation is only going to contribute to Sony's rise because people are going to be like, wow, this thing is like so in demand. So I really started buying into Sony in the low 40s, the low 50s, and I've even sold it a couple times at 70s. Now it's at 97. So this is riding a really high all-time right now. Again, as I said, I think this company is going over $100 a share. So we'll see how that turns out. That's my prediction. Advanced Micro Devices. This is the future, man. This company is the future. My initial's a lot lower than this, but this company will continue to rise, in my opinion. We're talking long-term. So again, I like this company a lot on the next dip. Same thing goes with NVIDIA. I know that NVIDIA is really high, but again, you can also see the gap between AMD and NVIDIA. I do think NVIDIA is going to ride a really big high and continue to. So, we'll talk about that. I think an entry price for NVIDIA would be $515. AMD would be in the high 80s, low 90s. Netflix was something we talked about a couple weeks ago, and I was showing you guys there is this trend of 460 to 550 in this range. So I actually had a strike at 480 the other week, and I bought a good amount. And I'm going to take a couple wins today at 530 because that's almost $50 a share. It's some nice money, man. It's some nice money today. So I'm going to take a win here. But again, this is what I talked about with you guys, man. This company every 2 months or so is doing this trend. And we've got upcoming earnings on January 19th. And as the holiday season continues, I believe that this has a shot to go 550. It has a shot. We're close. We are really close. So we'll see if that, can gather that sort of traction upcoming. Twitter, guys, is something that for me is super still undervalued at 54. We talked about it the other week at 45. I still think Twitter is undervalued. I still think Twitter is one of the most used platforms in the world, and I think it's growing. I think it's so growing for businesses right now. And I think once we get overall ads like running on this site, we take a look at the gap between Twitter and Facebook. Facebook is 280 right now, and I still think Facebook is undervalued. We take a look at Google, right? Google's 1800. Yes, these companies, Google owns a lot more advertising, but I'm saying that there is the potential with Twitter one day, in my opinion, to go way higher than it is now. I still think I am huge on this. And if you take a look at other, sites like CNN Money, what they have for a prediction, I don't know if it's going to be that high. It's only 65, and they have a low of 19. I don't know, man. I really am big on Twitter. I think Twitter, once they can figure out the money aspect of it and bring more revenue in, I think they can kill it. I don't care what the earnings are. So I am a huge believer in this in the future. We'll see how it does, but I'm a big believer in Twitter in the future. So again, we'll kind of see how that does, but that's something that I'm definitely looking at and continuing to check out. Now, other things to talk about, I guess with the market, I'm looking through my watch list right now of anything that's really of interest to me. I think right now we're seeing some retail do really well. Lululemon was a company that I was in at 315. Now that's 380 today. So they're doing very well. They're almost at an all-time high. But again, you would look at this company to be rising a lot right now because of the holiday season, right? This is something that a lot of people are going to get Christmas gifts for. People are going to buy this stuff, and earnings are actually in March. So don't be surprised. I mean, I don't know. Don't be surprised if we get over 400 with this company, man. I think this is a big popular company. Something that has surprised me, my initial with Spotify was like 150. I sold at like 240. They're 330 right now. But to me, it makes sense because they're number one in the competition. They're killing it. Spotify is literally killing it. This is not surprising to me. So this is a company that's doing very well right now. Something that I may or may not have talked about in one of my recent videos was Qualcomm. This company I like a lot. Huge company in the future for the 5G and all that. I actually started as an initial at 140 the other week. So we'll see how that does. We did hit like 155. But that's good. That's good because we're having a wave right now. This got up to 155. We're coming back down. I think we may go back up again. So we'll see how that does. That's something that I am, looking at. I recently just took a lot of cash on a lot of banks. Banks are really high right now. Goldman Sachs, Morgan Stanley, JP Morgan. I just took a ton of money on some of these companies because I was up big time. They've been paying me dividends for a long time. You can see here we got a yield dividend of 2.05%. So I took a lot of money on these recently, man. I was really happy with where I was at. And took some money on some of these. But still, obviously, I never sell all the stocks that I own, guys. I learned that from my own mistakes in the past. Don't ever sell every single stock of a company you own. Always keep a couple no matter how happy you are with your profit because just in case they go up long term, look, if they go down a little long term, you're still netting a huge profit. But if they go up a ton long term, you're going to be pissed off. McDonald's is something that I'm also watching. Yes, they were under 200 in some of the periods of Corona, but this is when nobody was going outside. The reality is that we are everybody right now is still going outside. We are surviving a huge second wave and probably the final wave of Corona. Dividend yield here as well. I think McDonald's is going to do really well. They're starting to do a lot of deals with like artists and things like that. Yes, they are at an all-time high, but again, I can see this company doing really well and getting up to that 230 range. So that's something that I am really watching. Shopify is a company that is Bitcoin's 23,000. Holy. Shopify is a company that's doing very, very well right now. They just had this is probably the reaction of the post-Black Friday, in my opinion. They were 900 at a point. Now they're at 1,200. So this company is doing very, very well right now. Is that surprising for me to see? Not really. And what I'm seeing with this right now is there's a lot of money in this market. That is something that I can tell you guys with assurance that this market currently has a lot of money in it. So that is crazy to see. Docusign is a company that I just bought into the other week at 215, and now they're at I think 210 actually. They're at 247, and I hit it pretty hard. I hit this pretty hard. So yeah, up big today. A company for the future. March 12th next earnings. I don't know how much higher this is going to go. We never got over 260 with these guys, but this is a company that I think will continue to do well. I took some money today, and I'll keep a lot of it to see if we can keep riding this one upwards. We'll see how this goes. Other than that, though, guys. There's not too much that I'm looking at, man, to pick up. It's a lot of the same stocks on the next couple of dips. I think JD.com is a really interesting one because this and Alibaba I really like. They are Chinese companies, so you take a little bit more of a risk with them just due to the U.S. restrictions and all that. But, I mean, look, they're both companies that I think have massive upside in the future. So I'm going to continue to watch some of these and see how they do. Something that is really interesting for me is this is a movie theater company in America, and this has been really interesting to watch because this stock, they recently came out and said they're making no money. They're going like bankrupt. But this is something that if you were a person with not a lot of money and you wanted to take a risk, this is an interesting stock. They got down to $2 on the share at a point like a month ago. And, they move up and down a lot. So this is something that is really interesting to me. I think this does have the chance to go back up. And, I think if you wanted to risk like a little bit of money on this, it might be worth it. They're struggling a lot right now, but, they always seem to find a way to get back up. And I don't know if AMC is ever going to go bankrupt. I mean, I think movie theaters are moving a lot more into these Apple TVs and stuff, but this is a company that was valued, just 2 or 3 years ago at $33 on the share. And yes, they've over time been depreciating, but And there are up, I guess, technically 4.5% today, but that's not really a lot when you're $2 on the share. Most people are saying to sell, but I think this one is an interesting one, man. I mean, I think this is something that, we could be looking at movie theaters being fully open again this summer. This is something that's a super long-term play, but I think it definitely interests me, man. I think there's a possibility that this could really go back up again. It's a super weird one, though. I mean, I know they're getting killed on earnings, so there's no rush here. There's definitely no rush here, but this one definitely interests me. And then I think airlines, I had spoke about airlines. They did really well a couple weeks ago. I do think some of these, though, I don't know if people are going to fly, very soon, but I think this is something to definitely watch because these guys are all undervalued. And when this does start to happen again, consistently, these will go all up a lot, even though the revenues are down. So the buy time on some of these companies and retails and things like that, it may very well be next earnings. Next earnings may be horrible for airlines. It may be horrible for anything that's super retailed because, again, I think throughout this winter right now, a lot of people aren't going to these places. But we may see a spike and something occur. So my next big move could be after the next earnings in February and March when I feel like the vaccine is starting to be spread around a little bit because I think we may see a lot more people going out, doing stuff, flying, traveling again next summer. So, yeah, that's really what I'm looking at today, guys. If you guys enjoyed the video, let me know. And let me know anything you guys want to look at maybe in next week's video. Thanks for watching, guys. Good luck.